To begin on patriotic note, I request all of you to stand for the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Bharat Mata ki. Thank you so much. Good afternoon, everyone. My name is Sanika Disa, and it's my immense welcome you all to the 2026 by NPA Consultants Private Limited. At NPA Consultants Private Limited, led by Dr. Visswas Panse, we have over 40 years of expertise in stress assets. We specialize in turning impossible NPA cases into structured, workable financial situations. Over the years, we have consulted more than 5,000 clients, more than 3,500 benefited, more than 600 assets saved. Ladies and gentlemen, it is my privilege to introduce Dr. Visswas B. Panse, a seasoned finance professional with over 40 years of distinguished experience. His expertise spans banking, project finance, corporate advisory, and NPA resolution. Also, I would like to tell you all that he is a proud Economic Times Award winner. And let me introduce all of you and let's welcome Dr. Visswas Panse. We are honored to have CA Abhay Madhuvane as chief guest today. CA Abhay Manudhane is highly accomplished insolvency professional, a promoter director of Waterfall Insolvency Professional Private Limited. Dr. Panse, I request you to felicitate our chief guest with memento, bouquet and book. We request CA Abhay Manudhane kindly take seat on dais. Also, we are privileged to have Mr. Ashok Katra, ex-CGM, IDBI. He is retired as General Manager, IDBI Bank Limited, with over 36 years of banking and financial experience spanning across corporate banking, stress asset management, debt restructuring, special asset management, and branch banking. We would like to acknowledge and felicitate the following leaders who have joined us today. I request Mrs. Kamini Kanekar to felicitate our dignitaries and leaders. First, I would like to call on stage Mr. Pratak Wangde, CEO of Shiv Sahyadri Sahakari Patpedi Limited. Mr. Dilip Shantaram Sant, General Manager, the Satara Sahakari Bank Limited. Mr. Sudhir Bhate, ex-AGM UCO Bank. Mr. Harshad Neginal, National President, Shiv Sena UBT Industries and Cooperative Federation. We would like to welcome Mr. Vikram Makandar, actor, filmmaker, Vikram Productions, India. We would like to welcome Mr. Shambhu Singh, founder and managing director, Rhomboid Fingru Private Limited, ex-executive VP Kotak Mahindra Bank. Mr. Yuvraj Mohite, managing partner, Tara Lensquist. Mr. Vishal Gabda, Director, Bazari Global Finance Limited. Mr. Ramesh Babu, ex-judge, Consumer Court. We are honored to have you, sir. Mr. Puneet Chaudhary, CEO, Fairdeal Corporate Advisors Private Limited and MD, Virtuous Advisors and Resources Private Limited. Advocate Pradeep Sohani, Advocate Pradeep Sohani, ex-DCP Mumbai. Currently he is a practicing advocate, High Court Mumbai. Now we request our chief guest, CA Abhay Manudhane, to kindly come on stage and speak few words here. I will not say few words, but we all love to hear you.
Good afternoon, everybody. At the outset, thank you. At the outset, let me thank Dr. Panse and the team members of NPA Consultants Private Limited to invite me to share some views of how to avoid NPS. That was the word used. Well, if we say how to avoid NPS, then I think it is something contradictory to what NPA consultants are doing. If we want to avoid it, how it will happen? But nevertheless, that is not the issue. The book Sir has given to me today is what given is NPA nightmare. Really, it is a nightmare. At least to whom? At least to the borrowers who takes the money, who may not be able to do the way in which it was required to do, maybe for whatever reasons. It's a really nightmare. But nevertheless, it should not be nightmare when there are possibilities to avoid NPAs. There are various ways in which we can avoid NPAs, but that stage comes at the first stage. When the borrower takes the money, firstly he should observe. I, as a finance professional, I feel rather we should concentrate more on how to service our borrowed money. One must appreciate the fact that once we borrow the money, the meter starts clicking. And that is the stage in which one should start avoiding NPAs. But many times it happens that the calculations goes wrong, maybe the extraneous forces, maybe over-ambitious projections which you do it, which invariably in various cases it used to happen. I am using the word used to happen. The reason is that if we see the history, because of such over-ambitious issues, quite a few companies have gone to the trap of NPS and then they have gone to the insolvency level. So that is the stage which comes. But as I again saying, if you are not able to do it, if by any chance if the borrower gets into the trap of NPS, I think lots of financial engineering is possible. Experts are there, you people are experts. I don't think I should talk more on that, but there are ways and means it can be done. Lots of possibilities are there that financial restructuring, financial engineering is there, and with that financial engineering it is a possible. And my request, and maybe I won't say advice, but it's a request to the borrowers to see that NPS should not lead to the disastrous circumstances. At the right time, if you are able to address the NPA, lots of things can be sorted out. Otherwise, it goes to the very, very bad situation. Classic case, which I would like to recommend here, I would like to refer here. I think the IDBF guys are here. Such a senior CGM is, ex-CGM is here. What happened in case of Kingfisher? Kingfisher has gone to NPS, they have gone to the debt restructuring, etc., which they could not do. They could not go for the advice of experts. I remember there are some of the experts who are giving certain advices, but they could not go ahead with that expert advices, and ultimately we see what happened. As I understand, it was something 7,000 crores plus, which was debts, which ultimately he landed into payment of more than 13,000 crores. And maybe his assets, which were sold and auctioned or whatever had happened, maybe more than whatever the amount may be there, but it may be at least double or triple of the amount which they are recorded. This happened mainly because the restructuring has not been done at proper level. Probably they are not listened to the experts. So that's why the role of the experts come there. Maybe NPA consultant is one of them. They can give the good advices. Our borrowers, we can even recommend them that if some experts like Panse sir is there, they can go ahead. But if it does not happen, then it goes to again the worst situation things, which is happening particularly after 2016, rather 2017, when insolvency and bankruptcy code, which has come into implementation. At that stage, when it comes, bankers and lenders have no other choice than to declare the borrowers as NPA borrowers as insolvent. Rather, they have to file application under Section 7 of Insolvency Bankruptcy Code, and then the thing starts. But never again at this stage also, I think it is still possible for the borrowers to try to avoid the extreme circumstances. We have been handling quite a few insolvency cases right from beginning. I am running one of the insolvency professional entity wherein at least we must have settled more than 60 to 70 cases where resolution plans which has come. But when the resolution plan comes, what happened to the promoters or the borrower? Their company has gone out of their hand. That is not the stage it would happen. So at that stage where the consultants can come into picture, they can give the advice how to avoid that situation which has gone, that application has been filed under Section 7 or maybe Section 9 if it is operational creditor for declaration as for commencement of CIRP. It can be avoided. It is possible before the COC is formed. At this stage which can be done. If it is not, then the last stage comes under Section 12A where 90% people have to agree. But that is also that stage. I think time has already gone. So to get the 90% persons approval, I think the promoters will have to pay substantially high amount. So that is not the stage which one will like to go to that stage. And right time restructuring is required, and that is the essential thing to happen. And that is why the word used by in his expert's book, nightmare, that will come to an end. There will be no nightmare, rather it will be a way of solving the problems. That is what I feel. So I will again like to say that NPS can be recovered, it can be cured at appropriate time. It has to be done, and people, rather the borrower, should not lead the company to go to the extreme level which may lead to losing the control of the organization which he has built, probably majority of the cases from the scratches they build, and the organization goes from their hand. Quite a few big cases are there, and everyone knows this, how many big companies have changed their hands, and what happens to the borrowers at that stage. I think that is the way it is to be sorted out. I really don't think I should speak more on the subject, particularly when experts like Mr. Panse is here, that they can solve the problem of NPS, and we also can help them if at all the extreme thing goes in the insolvency stages. We are there to help. My colleagues are there. My other professionals are there. They can also help it. I think with that, I would like to end my small speech, which is on the subject which Dr. Panse has given me to speak. That's what I would like to conclude at this stage. Thank you very much for giving me a patient hearing and listening to my views on the avoidance of NPS. Thank you very much.
Thank you, sir, for sharing your views. On that note, I would like to request our guest of honor to guide us today.
Good afternoon, everybody. It's a pleasure being with you today, and I thank Dr. Panse and his team for inviting me here. At the outset, wish you all a very good evening. Let me start by saying our coming to the revival and capital restructuring. At the beginning, let me start and state the obvious that the world is in turmoil today. We are actually in the midst of 3 wars, and it has far-reaching repercussions on both the Indian economy as well as the various intermediates and the companies that perform in this particular economy. The foreign exchange impact, the impact of supply chains getting disrupted, oil touching dollar nearly 100 a barrel. Most of the industries are going to face a lot of issues in the short term or in the medium term. And that's where the role of financial advisors and intermediaries come into play. And this is the point at which the borrowers need a very helping hand or advice, good advice, as to how to tide over the emerging issues that are coming in. We all can see those issues emerging. But at no point does the promoter be, very frank enough and come to the lender and say, okay, I'm facing this cash flow problem, I have this issue. They keep on trying to service the debt, and at a particular level, it is not possible to do that. Value needs to be created by the intermediaries to say what exactly ails the company. You have to understand or structure exactly what sort of issues he is facing at this point in time. And most of the issues emerge from the way we start financing a project or probably do I'll give you a small example. We were handling a shipping project. It was one of the largest shipbuilders in India. Normally, what sort of financing does shipbuilding need? The lenders sanctioned working capital for shipbuilding. Shipbuilding doesn't happen, it's not an asset which can be funded by working capital. What happened was that there were contracts that were available. Money came in from prospective buyers. The domestic lenders sanctioned advance payment guarantees, which were non-fund. The risk remained with the domestic lenders, they did get transferred to them. When the industry is doing well, the contracts continue, ships can be delivered, possession can be taken. But in case the shipping industry goes through a downturn, the prospective buyer simply puts up an hand and says, no, I'm not taking delivery, and the devolvement happens here. The entire debt became non-performing and fell due, and as stated by him, the amount of debt, which was only about 6,000 crores, went up to 13,000 crores. Because interest is a meter which keeps running whenever you are even sleeping. Even today that will happen. You are not making money, there is a disruption, but you don't want to go to the lender and tell them this is what I am facing today. The restructuring, as stated, should happen at the right time, only when you are able to disclose your problem, are able to understand that this problem cannot continue the way it is continuing, and probably I need to restructure on time. Restructuring is nothing but trying to understand at that point in time that this is the cash flow issue I am facing, this is the remedial measure that is there, and this remedial measure should be taken and put into place before the asset turns into a non-performing asset or slips into a major issue. Invariably, promoters or companies are not upfront with the lenders or come to them at the right time to tell, this is my issue, you need to resolve it. The balance sheets will continue to show a very high level of EBITDA, profitability will be there, but servicing capability is not there because there is no cash flow. The lender on his part says, okay, you are making money, why are you not servicing? You are a willful defaulter. So this circle goes on, and then probably you end up under an insolvency process, or you are trying to save the company when it is not possible to save. So my suggestion would always be that as and when you feel that there is a problem or an issue, or I am trying to surmount something which is not in my hand, or even which is in my hand, because all project assessment or appraisal is in a dynamic environment. The larger the project, the larger the risk that it carries, both on completion as well as operationally. We are all living in a very uncertain world. Things keep on changing. Technologies keep on changing. We are overtaken by so many events which are not in our control. What is in our control is trying to understand the problem, trying to take corrective measures when it is possible to take, approach the lenders upfront and tell them that this is an issue. Maybe he will help or not help, that's another aspect of it, because his perspective never converges or may not possibly converge with that of the borrower. But at the same time, he will at least have to appreciate that there is some issue which he needs, because ultimately it's going to land at his table. Today, as I said in the turmoil, the lenders are also worried. The lenders are worried that whatever they have lent probably can turn into NPA. They are more mindful of their balance sheets or structuring for the sake of keeping it out of NPA rather than really reviving the business. He just mentioned Kingfisher. Well, Kingfisher, sir, was a problem where airlines, film funding, all are glamorous areas which always keep attracting money. Had he restructured on time or probably taken advice that he can settle it at a much lower rate, he would have got away and the banks would have gladly settled it at about 5,000-6,000 crores. But when you have a mindset that I'm not going to pay, I'll get away with probably not paying anything, that's when you try to sort of, not fall in line with whatever is advised to you. You tend to think maybe I'll get away with this. But it's not always possible to do that. Things keep on changing. Things have changed significantly in the sector after time. And ultimately, the same thing happened with a lot of jewelry manufacturers who thought that, they could get away with it. I remember I advised one of them that structure on time. It's possible to do that. He didn't do it, landed in a major scam. Yes, sir.
Sir, I heard you very correctly.
Mm.
I have some suggestions here.
Ah.
If you remember, during COVID times, there was a lot of restructuring was done, and some provisioning was required to be done. Those all accounts were kept standard accounts. Why bankers are hesitating to restructure thoroughly, immediately on restructuring standard asset, you have to convert it as a substandard asset and NPA start. Reason may be very genuine, but somewhere you have to take recommendations to regulator that when you are doing restructuring, at least give some time so that standard account cannot be made as substandard account. Because if it is substandard account, then on.
Not see, sir.
So there some recommendation is required because you need some time there. During COVID time, you regulator has allowed, but see the circumstances, see the genuine here, and if it is possible, we should allow them. I think we should take recommendation to regulator. Thank you.
Sir, during COVID time also, it was a very abnormal event, and even the regulator did not, or the bankers did not give the dispensation they should have given the borrower. If you are not performing or not working for 2-3 years, the entire interest that accumulates at that time has to be serviced from several. The asset will get impaired. Lines of credit under ECGS and all were provided. What was that? That was only a restructuring to say, I am giving you additional money, I am keeping you out of NPA, but the debt remains on the books. The debt, you are impaired as an asset. Ultimately, you will have to service that. You are not getting away with that. Provisioning will have to be made by the lender at some point in time either way. The problem is dependent on how his balance sheet looks at a particular time. If today my balance sheet cannot take, luckily today all balance sheets of banks are pretty healthy. They can absorb these shocks. But there was a time where most of the banks were not in a position to absorb those shocks. And the entire focus was on how to keep the asset out of NPA rather than really restructure it. So abnormal packages were drawn up, which were destined to fail and which failed ultimately. They never got off the books. And the promoters also, thinking as a short-term strategy, accepted all those things. Once you accept, the problem here is you should not accept what you are not able to deliver. If you are not able to deliver, if your cash flows will not permit, if the upside doesn't happen, then you have a problem. Okay, so to that extent, the regulator can give a particular dispensation for a period of time. Otherwise, he will be rewriting everything that is there. If I keep it standard after being impaired also, I have a problem. The standard asset will say, okay, I am doing well, I am standard, but he is impaired and he is also standard. It can't happen. The regulator has to have an even hand, so there are some limitations there. At the same time, the structuring has to be timely. The intermediaries, the advisors need to add value to understand what exactly can be done to mitigate the risk that is emerging now. These risks are abnormal risks that happen due to external factors. But you need to take corrective action. Value has to be added to lender, has to understand at this point in time what he has to do to not allow an asset to slip into NPA. After NPA, of course, it doesn't mean that NPA cannot be restructured. It can be structured. Provision will have to be made. Those things happen. And turnarounds do happen. But the problem is the percentage of turnarounds is very minuscule and ultimately goes to IBC and changes hands otherwise. Coming to the larger point is when you need to structure, when you're borrowing, when money is being given, you're not looking into most of the covenants that come up with you. Only later when you realize that, okay, these are the covenants which affect you. My always humble suggestion would be that whenever you are borrowing, you should borrow, understand what are the implications of that borrowing, where it is to be used, and of course, at stages you need to mitigate the risk, take out the risk or mitigate it in the best manner possible. But this is a, you are still working under an uncertain period of time. Projects will undergo those ups and downs and will have problems. My only suggestion at this stage is that we, as I said at the beginning, a lot of turmoil, emerging situation over the next couple of years is not going to be very easy. Leaves a lot of scope for most of the advisors and lenders to understand and work along with the borrower to come to solutions tailor-made to avoid slipping into NPA, with the borrower and the lender both will appreciate. Thank you very much. I think I'll end here and take it forward from there. Thanks.
Thank you, sir, for sharing wisdom with us. Now we are excited to hear from Dr. Visswas Pansi on NPA and capital structuring.
Thank you. First of all, I thank Ashok ji and Manudhane ji being the chief guest and the guest of honor. I also welcome all of you to this conclave, which is talking about the subject is capital structuring for growth and revival. Let me first talk about capital structuring. I think you must have seen the brochure which I have already distributed, where I have said, don't approach the funder before meeting us. Why I am saying this? That if you do not structure your capital requirement and then you go for sake of money, you go to the funder, and then for any reason if you take the funds and if it is not properly used, you will find it difficult and ultimately you will land into NPA. For example, where you need bank guarantee, where you need LC, and instead of that you go for a CC limits, the cost of funding will go up. Your margin will be high. So ultimately it will affect your break-even point and your profitability will be reduced. Your payout ratio will increase and that will create a stress in your financial working. Similarly, so far we have been hearing when it comes to the fund requirement, we have got only two things in our mind. One is debt, so the bank. Other is equity, so the capital market. But there are very few people, perhaps none of the basic, many finance consultants are not aware about the concept of quasi equity. There are not only these two products, there is a third product called quasi equity. In my own life, I have raised quasi equity for number of times, particularly at the beginning of the business. The quasi equity, basically what is quasi equity? Quasi equity is, it is neither an equity nor a debt. It's not equity because it is not giving you the voting rights. It is not a debt because there is no interest. Then how do you raise quasi equity? The very fine example of raising quasi equity, which is already done by many people, but not done in a systematic manner, is that of security deposits from the dealers and distributors. That is also a quasi equity. There you are not paying them interest. You are not giving them voting rights, but still it is a capital. When I used to deal with dealer distributor training program, I used to tell the promoters that one third of your capital should come from this channel. That will balance a lot in your financial requirements. The other two things are very common, debt and equity, but still there, when it comes to the debt, you have to structure the debt properly. Long term debts, short term debts, there is a difference. Many promoters understand money is for money and they use long term capital for short term purpose and short term capital for long term purpose, and both way it affects their working, and again it leads to their NPA situation. Not only that, in order to adjust the working capital DP, many promoters, they do manipulation in their stock statement and their data statements. That is also very dangerous. That leads to some sort of a criminal offense. Many banks have done some criminal cases against that. So I say that when you want money, when you want a money for business, let us approach to the right kind of consultants before reaching to the funder. Let me share some of my examples in this thing. Small cases like I was dealing with a company called Lava Coated Paper. It was a rejected. I started my working after leaving IDBI with only rejected proposals. I never used to take the regular proposal. This lava coated paper, this case when I got, it was rejected by ICICI. I restructured the entire board of directors. We got professionals on the board. It was not only a family, this thing, though the promoters are the family members. Then we introduced the public issue part of it. So debt equity got a balance. So promoter need not have to bring much more money. We got the public issue done. There also, we were in need of US dollar. Initially the proposal was the need of US dollar. And that time it was a very big shortage of US dollar. Fortunately, IDBI was having line of credit of Deutschmark, and that was unutilized. So we negotiated with the foreign supplier and we made the payment in Deutschmark. IDBI accepted Deutschmark instead of US dollar. So this is what I mean, the structuring of your capital requirement. If you structure the capital requirement properly, it becomes easy to sell your proposal and it becomes easy to survive in the long run. एक मिनट. Now it comes to NPA situation. I would like to talk about NPA. For last about 25-30 years, I am working on NPA cases. When account becomes under stress or likely to become NPA, people come running to me saying, "Sir, can you organize some money immediately, within 30 days, within 40 days?" I said, you don't need money. That is a fear you are asking. First of all, you need time. You don't need money. And unfortunately, our legal, banking and financial structure is such that, which is absolutely on certain issues is impractical, I have written a book which deal with these aspects, that if I become an NPA, it means it's a dead end for my career, my business. I have met many promoters who were on the, who have even attempted to commit a suicide. And somehow they met me. I very proudly tell you that today those people are back to their business. They are doing good business. One of them is having about 700 crores turnover. One is having about 1,200 crores turnover. And these are the people who were struggling for their survival and thought of committing suicide. I think this is not the way that even our banking system or legal system should work. The entrepreneurship, particularly MSMEs, they are the job creators. And they are like a, at the beginning, when somebody starts a business, आप एक किसी पे पौधे की बात करो तो इनिशियली यू नीड टू प्रोटेक्ट हिम. What protection do we have for these beginners? I think there is no protection. Then another provision which we have got, 90 days delay in your payment or default, you will be classified as a NPA. Okay, for your international standards, even banking purposes, you can classify them NPA. But why are you after them coercively to kill their business, kill their entrepreneurship? When a father sees, when a son sees his father is struggling in the business and the bankers are harassing him, insulting him, people are coming at home giving the threat that we will take you out of the house, what sense his son will think that coming into the business? Are you recovering the business? Are you protecting the business? Are you killing the entrepreneurship? I think you are killing the entrepreneurship. The entire system has to look at it, that we should not work in this manner. I have seen many people committing suicide. What is the purpose of this entire system? I tell many people, अगर आप MPA होंगे ना, don't worry. Don't worry about the bank, worry about the business. When you are under stress or when you become NPA, 24 hours you are thinking about the bank. You should think about the business, not about the bank. We have been trained or we have been the cultured or the situation like that. We look at the business from the banker's point of view. We don't look at the banker from the business point of view. It should be, we should look at the banker from the business point of view. Who is for whom? I remember one case where I was having a discussion for the settlement in the senior level of the bankers. And ED of the banker has told the promoter that within 15 days I will see that you are out of your bungalow. Now such kind of a threat you are giving to the person who has 35 years without a single default, has serviced the bank. The entire branch salary for about 35 years was paid by the interest of this person. What is the business culture? For any business to be into the business has only two reasons. Reason one is to get the customer and reason two is to retain the customer. What efforts banks are taking to retain the customers? Every businessman is working for the customer. banking system or banking industry is the only industry who works for the bosses. They don't work for the customer. It's my strong opinion. The day you will tag their salaries with their performance, you will find the difference. Because they are not least bothered. What is happening with you? My kursi पहले मेरी सेव होनी चाहिए. I am answerable to my boss. If that culture is not changed, how can industry survive? Our Prime Minister has said that 3 crore houses are being built up. I have great respect for him. But I want to bring one particular thing to his notice. That आप 3 करोड़ लोगों को घर देने की बात कर रहे हो, लेकिन 5 करोड़ लोगों के घर निकाल रहे हो. और वो 5 करोड़ लोग वो है कि जिन्होंने आपको करोड़ों रुपए का टैक्स भरा है. और ये 3 करोड़ वो लोग हैं कि जिन्होंने कोई टैक्स नहीं भरा है. What kind of economics we are working on? I think this thinking process, this system, this mechanism has to be changed. It has to be looked at it from a different point of view. So today, with this meeting, I just wanted to conclude one thing, that whether it is a funding requirement or whether it is a trace asset issues, we should look at it in a structured way. We should structure the financing. We should structure the system, and the norms which are presently for 90 days of default and NPA, let it be NPA, but give them some ventilation period to revive themselves, so that coercive requirement should not be taken. My ultimate suggestion is that recovery through revival should be the mantra, not the recovery through coercion. Thank you very much.
Bold statements and eye-openers. Thank you for sharing your mantra with us, Dr. Panse. Now I would like to call Mr. Vivek Tiwari to deliver his speech.
First of all, good evening, everyone. The stage is बहुत बड़ा है मेरे लिए, and it's at a very young age. So thank you very much, all of the attendees who came here for the high tea hosted by NPA Consult Private Limited. You might be wondering why a finance consultancy is hosting this type of event where we are busy with the Excel sheet, balance sheet, finance, ये books, वो books, और फिर हम यहाँ पे अचानक से मिल रहे हैं for the high tea. Lot of the times, जो deals होते हैं वो बंद कमरे में conference में हो जाते हैं. But we are not meeting a people like you, where we are casually dealing with all of the things, and we can discuss the proposals properly. And it's very, you can say, बहुत रेयर ऐसा होता है कि हम सब साथ में ऐसा मिल के पूरा चीज़ें हम साथ में कर रहे हैं. It's just need to give a lot of thanks to all of the dignitaries over here. Thank you very much for the event. आप लोग यहाँ पे सब आए, for panel associates, everybody, and we can conclude it for doing this. Panel discussion will be there after 5-10 minutes. After 5-10 minutes, the panel discussion will be started. Thank you very much for a short time. Thank you.
Now I request CA Tejas Padde to come on stage and to moderate our panel discussion. CA Tejas Padhe is a practicing CA with over 25 years of experience in audit, taxation, and financial consulting. He is a proprietor of TV Padhe and Company Chartered Accounts and an advisor to Financial Catalyst, a business finance and cash flow management consultancy. Joining him are Mr. Ramesh Babu, Mr. Puneet Chaudhary, and Mr. Vishal Gabda.
Yeah, better let us. So good evening, everybody, and it's a honor to be with such kind of stalwarts here, especially people who are from a industry which generally chartered accountants do not dare to touch. So, sir is a chartered accountant. I am also a chartered accountant, and in my career, we have always been a bit of fearful towards this kind of what we call as stressed assets. And today we are having a panel discussion about before NPA. So pre NPA, what you can do. So there are three experts with us. I'd like to invite one by one. Mr. Puneet Chaudhary. I am very glad to invite him on stage with over 18 years of experience. Yes, sir, please come. 18 years of experience in corporate lending, capital markets, structured financing, worked with L&T Finance, RBL Bank, Indus Bank, and involved in transaction exceeding USD 20 billion. So comes with a very big experience in finance. Please welcome him. He will be guiding us about PE finance, that is private equity finance. His expertise is private equity finance. The second person I am really happy and glad to invite is Advocate Ramesh Babu. Yes, sir is here. Ramesh sir. Yeah, please sir. So this is very interesting topic going to be for me because borrower as a consumer is something which will be guiding us. He is an advocate High Court, ex-honorable member of District Consumer Commission, accomplished career of 39 years of experience in real estate, documentation, licensing, associated with cooperative housing societies, developers, and comes with a very, very vast legal experience. And third is Mr. Shambhu Singh. Yes, please, sir. Yes, he's presently working with Rhomboid Finguru Private Limited, ex-VP Kotak, and again comes with a structured finance stream of business. Sir, Ramesh sir, please come here. I'll be taking that seat. आप वही बैठिए sir, Shambhu, please. So with this, I will just take the seat and I'll start the discussion. Yeah, I'll need a hand. Hand mic. Okay, thank you and welcome all to this panel. And the first question, I'll start with Shambhu sir, and that is about credit risks. So when you're approving any funding, what are the first credit risks which generally you see in a borrower? Before we start, I'll just like to touch upon one subject which was discussed, that is timely structuring and proper structuring. So before structuring, we have to understand the risks, credit risks. So I'd like to start with you. What are the credit risks which are generally being taken or which are being studied before borrowing? Yeah.
So, hello, good afternoon. Yeah, hello. Audible? Audible? Yeah. So, I think question is once you observe some stress, so-called early warning signal in account. So, I think at time of acquisition, fresh acquisition, I will say, credit assessment is different, where you need to analyze end-to-end techno-economic viability and all. But now I think here we are discussing about once you find or observe some stress, some amount of early warning signal of slipping towards NPA, there while credit assessment for capital restructuring, where we have to see whether intent of the borrower is right or how. Hello? Hello, Arjun? Yeah. So while restructuring account where there is a stress or there is a early warning signal of stress, there we used to first gauge into or we try to understand whether intent of the borrower is right. So after giving proper counseling, even additional funding, like Dr. Francis said, to revive the account. I am of the same opinion, coming out of the same school of thought, where it should not be like destroy the business. Entrepreneurs should be revived and they should be given chance. So, but it should be backed by proper analysis of intent of the borrower also. So then first credit risk we generally get into their intent. If intent is right, then we try to get into whether really that intent is backed by some proper decision. Maybe sometime thought process is blocked or they need to get some counseling, how to think, how to say revive the business. Sometimes we are counseling them like capex cutting. So capital and operational expenses. Sometimes promoters are very sensible. No, I will not do so. But only we want to get additional funding. So we are trying to understand whether they are really ready to hear or change their business model and that sort of. The basic understanding is their intent. If that is right, then certainly if they are ready to change their business model, even thought process, and some additional technology sort of. So these two things are basic initial credit analysis we do, and certainly we get into all how and how much time, what type of debt is almost not only debt. So sometimes customer is blocked with only debt. Capital restructuring is not only debt. So sometimes we have to replace something low cost debt, sometimes consolidate debt for longer period. So there are multiple ways, and that can be executed at ground level after really sensing intent of the customer once they are ready to. And certainly there should be support, some capable people, manpower, maybe from bank side or even consultant side, who can really guide them properly. And sometimes we are now really proud of this forum where really we are coming out with some basic school of thought where revival should be done to take care of something government GDP or you can say national GDP, and we should be in a position to support them with additional thought process. I'm saying different structuring of the proposal, sometimes by way of equity, sometimes debt can be replaced by equity, but the promoter are not ready. But then second part, like I said, whether they are really flexible to buy this new concept, new thought process, new structuring. These two are the basic which we do initially, and then certainly there are multiple ways to restructure. Thank you.
Yes, thank you. Thank you for this elaborate answer because you have covered lots of things. And this helps me to go to next question very easily. And next question is for Puneet sir. And now I think Indian economy has changed with one thing I will for sure I'll say, and that is after coming of Shark Tank in India. I'm not much favor of looking at Shark Tank or looking those episodes because they are just a glamour presented. What happens behind that is not really discussed. But as we discussed many a times, restructuring, private equity option is not really looked up to, as promoters are quite resistant of selling their stake or they are very quite emotional about their businesses. So how do you really think that the business is really investment ready from PE point of view, private equity point of view?
It's a great question, sir. What I will say is any business is evaluated for a suitability of private equity based on typically 3 or 4 pillars. The first pillar is scalability, and the second pillar is the management quality and depth. The third pillar is the governance of the business, and the fourth is clear use of proceeds and the exit strategy. The first pillar deals with the scalability, which basically comes from a moat. Moat is a unique proposition which every business has to basically sustainably grow and sustain across the market conditions, business segments, customer segments. It basically creates a path to profitability because that is something which is a differentiating factor for the business to grow and run on its own. The competitive moat, path to profitability, ability to scale in geographies, businesses, and the customer segments, and demonstrated revenue growth trajectory is what people evaluate a business on. That's the first pillar. The second pillar is the management depth. The management depth basically involves understanding of a fund or an investor or a potential shark, that whether this guy is an entrepreneur and he wants to run an entrepreneur himself led model, or he wants to institutionalize. To institutionalize, the person has to delegate, trust, build team, and build an institution. So that's the second pillar which people look at, basically resilience of a business beyond the founder. At some point they will basically raise a round 2, round 3, round 4. That's when they need that flexibility for this founder to give way to the new management, lose control, and grow with the organization, basically making the pie bigger. So the third is governance. Governance includes the transparency in the numbers, the reporting structures, and the ability of a board to run, or ability of an independent board without the founder to run the organization, which includes reporting, auditing, transparency, and everything. The fourth is clear path to profitability and the use of funds. All the funds invested has to be EBITDA accretive. That's the level 1 of check. Second level check, which we all do, is basically accelerating the growth instead of funding the losses. In most of the startups, you might have seen that a lot of money has been claimed to fund the losses. That's not the case, sir. Most of the times, people just want to measure the runway, how much runway you have, and based on that, they decide the path to profitability and sustainability. And accordingly, they decide their bet, that this is the amount of money I want to bet on this startup. So this is the fourth pillar: clear use of capital and exit strategy. As Panse sir mentioned, in every transaction, basically we are dealing with a commodity called money, and the underlying measurement scale is time. So all these contracts are basically time value of money derived into a form of a contract. It could be equity investment or a loan. Ultimate aim is to exit with proper terms. Thank you.
So again, next question is for you only, because it is, yeah.
Sir, moat is a differentiating factor of a business based on which the business sustains. Basically, it's a key differentiator. Like say, you take any of the businesses, we can discuss a moat in that. In most of the cases, the moats are unique technologies or distribution networks, or the way the company deals with their dealer distributors. So these are the I should not say business secrets, but these are basically differentiating factors from the other competitors, what you offer. Thank you.
Yeah. So he spoke about, yeah, we'll take questions later, please. So he discussed about losses are being funded by capital, which is happening nowadays.
I would beg to differ from that because most of the times the balance sheets are showing losses. Basically, this is the cost of growth. By basically you are creating a sub-segment, you are creating a market for. In 2016, Swiggy came to me. This is a real story, by the way. For a funding, and I laughed at them and told them कि boss आप क्या करोगे? बोले हम पिज़्ज़ा उठाएंगे, आपके घर पे देंगे. तो मैंने कहा बस इसके पैसे कौन देगा? मैं तो पिज़्ज़ा के देता हूँ. And I didn't fund them, and they were in losses, and they were in losses just till before the IPO, just 1 year back or 2-3 years back. So 6-7 years they took to build an organization which just delivers rotis, pizzas, tiffins, everything, and then they kept on adding categories, businesses, and stuff like that, including cloud kitchen and quick commerce now. So I think this is basically one has to visualize. So I failed to visualize the founder's vision, that what he wants to deliver. It's a very simple thing: picking up a thing, dropping it at my place, and it still had value. So you may call it loss funding for the initial rounds, but basically he was building a backbone, he was building a supply chain, he was building a technology, he was building a network, everything. So all those were investments to that tune. The same was the case of Zomato. Now Blinkit, now so many others coming up.
So the question was not about directly Swiggy or Zomato or some stalwarts which have already been, or unicorns which are already built. The question typically comes from MSME background. MSMEs, when come to us, chartered accountants, they ask this question. इनको losses है, फिर भी उनको पैसा मिल रहा है, हमें क्यों नहीं मिल रहा है? The one of the factors is due diligence. I think what you would like to say about that due diligence factors which comes in while looking at the PE especially.
Sir, why only PE? When you lend money or invest money, ultimately you're dealing in a commodity called money. Basically, the entire transaction is based on trust, and it is structured on time value of money. concept formulated into a contract. It could be a equity investment or a loan. So उनको पैसा मिल रहा है, हमें नहीं मिल रहा. So आप किसी भी MSME promoter को बोलिए, including me, कि how much stake you want to dilute or how much you want to let the company go, and just watch it. Will you be happy? Probably control नहीं छोड़ेगा. And then there will be related party transactions. Some or the other relative asking money, चलो company से दे देते हैं, and then we will see how to settle it. So those are the things people do not like. The governance, management depth, having an independent board, the willingness of a founder to listen to outside world, let go of the controls is what people lack in MSME, and rightly so, because MSMEs are any which ways vulnerable. They have client concentrations. Once you have client concentration, you want to keep hiding the data because you have only key clients, right? And you don't want to expose the entire world to know that who you are dealing with, how you are making your money, because you are too small. So rightly so, it's a right balance one has to find, and one has to graduate to a scale where you decide to become an institution, start to let go of control, start to let go of your own influence on the board. MSMEs typically have very small boards, minimum 2, but maximum I have not seen crossing 6, 7 people in a board.
That is a fantastic answer, and this takes me to again Shambhu sir. Before I go to Ramesh sir, Shambhu sir, the question is, there are two questions together, which comes from again P. He said, for any finance, due diligence is important. So how do you define a structured finance, and how it can help when the traditional lending is actually failing? Because you started with a stressed case, and then the borrower becomes a consumer, and then the case goes to probably legal matter. So before that, I just want to understand the defining of structured finance for people who are really looking for MSME finance and all those things. Yeah.
Right. So thank you. See, first, audible? Yeah. So regarding capital structuring, like said, it's not traditional only debt. While we are discussing about funding, is only discussion around debt. So we have to explore option like quasi equity. Very important subject, and I used to discuss around people, but that never being discussed. That should be explored. And sometime even like say I will add capex, which already covered last time. But more important, equity, where really we are putting a lot of effort to convince customer, saying I don't keep everything around you. So and somehow reduce this obligation, monthly or yearly obligation, so that you can revive the business. Once it will revive, whatever value per share, it will increase. So somehow challenge for all of us is to convince them, and that's why it's not traditional. It's somehow we have to convince customer who are under stress with new thought process, because they are still in 10-year back thought process. Somehow they are looking for short-term resolution. So we have to guide them how it will appreciate if you are getting into dilution of equity. So we have revived around 4-5 companies. Really, more than funding, we have put effort to convince them why it's important. So that is the real-time challenge. Say, and again, apart from equity, sometimes quasi equity, and sometimes even while consolidation of debt, because I have seen so many things, even not MSCV, even sometimes corporate people has raised fund which is short term, so-called business loan, and multiple short term. So timely consolidation of those debt, somehow bringing in security and then convert into long-term debt. We have revived many companies. So we have to change as a consultant also. We have to change our thought process, and more challenging again to convince all those concepts of quasi equity, capacity maintenance, or even consolidation of debt. And so challenge is to convince them, and we have to use our art really how to make them digest. Okay, so that's it.
So kind of a mentoring thing for
Right. So it
you.
should not be concept with us only. It should be really taught them properly, convince them properly, and that's why we are in a position to implement somewhere.
Fair. That's a great reply. But now, when this process is going on, this takes a time. And the next question is for Ramesh sir, Ramesh Babu sir, and then the banks come up saying that now you are a NPA. and then deficiency in service, something which comes up. So what is your say on that?
Yes. First of all, thank you very much for Panse sir for giving me an opportunity here. See, deficient instead of rather, I will correct this question. It is not a deficiency in service. I can say it is unfair trade practice by the banks and non-banking financial institutions. See, NPA matters do come before the consumer courts. Yes, I have also handled, but approaching consumer courts, you need to be a consumer. So here in MPA cases, it might be a proprietary concern, it might be a private limited concern, it might be a limited or some big organizations. But under Consumer Protection Act, if you want to file any consumer complaint before any of the commissions, that is district, state, and national, that depends upon the pecuniary jurisdiction. Now it is increased pecuniary jurisdiction. But I'll come to the deficiency in service and unfair trade practice, which is rendered by the banks and financial institutions. Individual can approach to the consumer. Now you say, can private limited company approach? No, not, because they are doing a business for their profit. But yes, can a proprietor can file a consumer? Yes, but he has to prove that this proprietary concern is mine and it is for my bread and butter. Then he will be in a framework of the consumer. Otherwise, the company cannot file, only individual can file. Now some amendment has come, the cooperative societies can file, NGOs, charitable organization can also, that is also defined under the person. Who is a person? 21D section. In 1986, when I was working that time, the provision was Consumer Protection Act 1986. Now they have, that is repealed, and now new consumer protection has come in 2019. So because in there are so many differences, mediation clause was incorporated. In 1986, there was no online payment shopping and so on. So that everything has been included in this electronic this thing. So now I'll come to the answer for this deficiency in service. So what are the deficiencies can banks make? Sometimes a person who takes the loan, I'm talking about the individual person or proprietary concern. He takes the loan and he pays the regular payments to the banks, but bank failed to credit his account. Sometimes by the mistake of bank, they may they make such a NPAs and they send the notices, recovery notices, then whatever it may be. But that can be filed. That consumer complaint can be filed by an individual person against the banks and for rectification of whatever prayers he want to do. That he can take the he can pray for the rectification of accounts or if the consumer has paid the full amount and the bank did not make proper records of his account, and when consumer courts comes to the knowledge that he has paid the full amount, so that case can be in favor given in favor of the consumer by uh, giving a compensation to the consumer, then mental agony, then financial losses, mental harassment, physical harassment. That amount can be awarded by the consumer courts to the individuals in case of any deficiency in service and unfair trade practice rendered by the financial institutions or banks.
Just extension of this question is, uh, if bank wrongfully reports a borrower to a CIBIL, so can it be challenged under the?
Yes. If it is a
Because-
wrongfully, sometimes bank just see one, two installments or bounces, and if he did not, that amount is not credited, sometimes they refer this matter to the CIBIL. So naturally, once the matter is referred to the CIBIL, so his record becomes, you know, So in that case also that civil matters can be also taken into the consumer court, and the consumer can pray to direct the opposite parties. Opposite parties means service and service provider. Here the service providers are the banks. Okay, they can direct the service provider to inform the civil to delete his name of the consumer. In this case, they can take civil matters.
Yes, okay. So with this, I come again to Shambhu sir, and that is about what are the common mistakes that lead to rejection of a proposal by MSMEs. The same question will go to you for equity, but again we'll start with structured finance. So MSMEs, lots of mistakes. They are not basically quite well addressed or well aware of many things. So what are the 3 or 4 or 5 common mistakes which they make, which they should avoid, so that a proposal is not rejected?
You're seeing a mistake from bank side,
Consumer side, from MSME side.
Yeah.
So from business point of view, as one of the things he said is governance.
Right.
So that can be one, but other things which probably.
Yeah. So good. Really, there are 3 4 things which we are really able to highlight. One is they are not really thinking real time. Like whatever changes expected to happen within maybe year to come, or maybe after a few months, they are not changing their business model real time. And that's why they are still, sometimes promoters are thinking that whatever I am doing since last 10 years, 20 years, it's really valid model, and this is the perfect tested model. That's why. So they have to be real time. So while analyzing, even as a, from banker side also, we this factor this also, whether really they are realistically, sometimes like after even a stress, or sometimes we are convincing them to sell off some of the property. They will communicate like, sir, we have approached you for funding to give me rescue, and not to guide me like disposal of property. But sometimes we have to be strong enough saying now dispose of out of 3 property 1, so that capital can be infused, and so they are not really ready to do that way. So even now mostly people are in consulting, customer are not buying the guidance given by consultants. So there again, they have to think that these people are having understanding of different industry, almost like real time, whatever RBI guideline being incorporated. So accordingly, for compliance purpose also, so they should buy guideline of the consultant. And they are thinking, you have to execute like my employee. Sir, they will pass on the wish list. I want this 5 thing. So that can also should be avoided, and we have to convince them. So if you want to survive in business for long term, you have to keep changing your business model. Even economics also, like nowadays, AI is very big tool even for our business. We have minimized employees to 50% just by incorporating AI. So whatever I'm saying, summary sheet or you to prepare within 2 days, 3 days, now it's being done within 2 3 hours. I'm saying so that way, and we also felt now how capex can be reduced. Okay, so it's applicable for all businesses. People should be, so there are 3 4 mistakes that the entrepreneur is doing. So I'm saying that's why they are somehow getting into early warning signal, or you can say stress. Thank you.
So yes, failed business model is something which really leads many organizations to becoming a stress asset. But many times in India, it is looked as बैंक से पैसा नहीं मिल रहा है तो प्राइवेट इक्विटी से लेते हैं, एंड विद द सेम मेस दे गो टू private equity. So the next question goes to Puneet sir. Puneet sir, what do you think about the same mistakes? These mistakes are covered, but any other thing which, suppose the model is good, the person, as he said, doesn't want to dispose of property or doesn't want to, is quite, you can say, a stubborn kind of person or owner, but then still he wants some equity investment. They have convinced him कि भाई थोड़ा equity ले लो. So then what are the things which you should really?
So really one point I want to add. One customer came and somehow I convinced him to sell off one of the property out of 4. He was not initially ready for. Said, can you give me in writing? So we have given in writing. After, like a doctor, we have taken all diagnosis of whatever he was saying. We have mentioned that under this circumstance, they are strongly advised, I use the word strongly advised to dispose of one property, infuse the capital in business, it will revive and has got revived. So yeah, so we should be also ready to give prescription like a doctor, and I have started that.
So, so private equity is also prescription equity, you can say. So, what is your prescription on this now?
I would put it this way: this is more of a practical equity or practical capital. I heard the detailed answer of Shambhu sir. Thanks for that. The when and I will also share another live example similar to Shambhu sir. So we studied 4 reasons of why deals happen in private equity side. One is the scalability, then management depth, the governance, and the path to exit with profitability. The 4 major reasons for which the deals get stuck or do not happen are basically the lack of financial quality, data quality. It could mean revenue recognition inconsistencies, some sort of adjustment to EBITDAs, some sort of weaker financial reporting and internal audits, as well as some sort of adjustments which typically investors discover when they actually start due diligence. So most of the private equity deals actually look very good, nice, sexy when you actually look at them as a prospect. Once you actually start looking at the papers, you discover all these things. That these are the things which are the adjustments to the real numbers, above the EBITDA and below the EBITDA, both. Then the second reason is the compliance and the legal risks. Let me make it a little interactive. Since we are talking about MSMEs and the comparing it with the startup world or equity side of the story. So, how many of you are running an MSME or advising them? Either of the two. So very few actually. So most of the Indian acts are so complicated that complying them is very, very difficult. Have you ever heard of labor code which was recently released? So very few have heard that. The labor code itself makes it mandatory to basically have everything equalized. Minimum wage has been raised to 15,000 rupees, and there is a code on the holidays. Then there is a code on apprentices. How many of you are aware about the Apprentice Act? Fantastic. Too many people, at least 4, 5. So when you actually look at the compliances, you have to go this deeper. And then when you actually look at the holiday list, it is a state subject. Now, there are national holidays, there are state holidays. And you have employees and businesses and your distribution network, your offices all across the states. Complying everything in one data format is humanly impossible. Now, thanks to AI, yes, we can. But still complying on a regular basis, yes, there are hits and misses. So this is the second risk which people think, while investing in a private equity, and they sometimes get stuck that this was not disclosed or this was not known. Any mismatch in PF or everything, it also goes for a toss. It's a serious offense. So these are the things, and there are contractual liabilities, contingent liabilities also. Contractual liabilities ka the live example is there is a merger going on between Ugro Capital and Profectus. Ugro has acquired Profectus. Both are very, very good NBFCs. Ugro never knew that Profectus has signed up, lock-in periods on their leases in their office premises. So now the acquirer has to go and sit in the subsidiary's office because they can't pay rent to the two offices. So this was basically a contractual liability which got missed. So there are so many contingent liabilities. So this is the second part. The third part is governance. Governance is very important because once you start due diligence, you start to understand why such transactions were done. There were some potentially looking related party transactions, which were basically not at arm's length. Arm's length transactions are still okay, even if it's related party. But if it's a related party and not arm's length, then definitely it raises a flag. The second thing most of the equity investors read is the board minutes. How many of you have never fought at your home, or there were no differences at the home, assuming 4 members at home? Not a single hand. So जब मैं बोर्ड के मिनट्स पढ़ता हूँ, देखता हूँ तो यूनानिमसली अप्रूव्ड, तो मैंने कहा यार घर में 4 आदमी यूनानिमसली अप्रूव नहीं कर पाते हैं एक चीज़, ये चारों डिफरेंट बैकग्राउंड से आते हैं, एंड देन दे ऑलवेज यूनानिमसली अप्रूव. देयर इज समथिंग रॉन्ग इन द होम. So those are the things equity investors watch out for. Then there are dominance visible of a particular individual or 2 individuals in a board. Probably the promoter or founder or the relative or a friend. वो उसके मुंह से कहलवा रहा है.
to push a agenda. So these are things because of which the deals do not happen. The third one is basically the governance. The fourth one is the market sizing and the ability to address a targetable market. So target market, shown to equity investors by the founder and the promoter is so rosy that कल के कल सारे के सारे लोग गुलाबी शर्ट पहनेंगे अगर गुलाबी कपड़ा बनाता होगा तो बट इट्स वेरी डिफिकल्ट to realize in a real world. So target market का जो assessment है, that itself sometimes is wrong. And second thing is in the first part we discussed moat. If there is no moat, then probably anybody can copy. So the target market assessment goes for a toss. And the last point in the target market assessment is basically the sustainability and the break even point जिसको हम लोग पड़ता खाना बोलते हैं. So that break even point, if it is fragile, if it is very close to the unit economics is the hardcore breaking down the cost and then arriving at the neutrality. If it is too close, then probably it's not an equity investment, it's probably a debt investment. So that's why equity deals रुक जाती हैं कई बार. Thank you.
So the next question with this, as you said, बहुत बार consumers the borrower सब situation पे आग बंद करके अपना business model चला रहा है, and then he goes for a toss, और बाद में वो still he has put on all effort, जैसे हम लोग sir said, बैंक से डरते हैं सब लोग, तो कुछ भी करके कहीं से जमा करके पैसे भर देते, but still there is some failure from bankers' part. And this question is for Ramesh Babu sir. What is the typical resolution timeline under Consumer Protection Act? So how much time do I have as a consumer to go to or approach consumer court?
See, normally in 1986 Consumer Protection Act, even as on today also 2019 also, from the cause of action, you have to file the consumer complaint within 2 years from the cause of action. Now, cause of action, how you define? For example, suppose in 2000, now what is going on 26. In 2024, there is some deficiency from the part of bank or non-financial banking or whatever it may be. The consumer has to send one legal notice to him within 2 years. Normally, he sends suppose after 6 months. So, once you send the legal notice to opposite party, the cause of action starts from that after 6 months. Okay. Suppose for that notice, if opposite party, that bank gives the reply after 6 months, so 1 year has gone. So from the date of cause of action, you can file the suit within 3 years. Means 1 year has gone here. So that is a normally the time period limitation. It is a limitation period to file the consumer complaint. But still, there are some cases. Person who has operated with the heart and he was in a hospital, so he could not make an application in time. He is not aware. Some family are not aware to go to the consumer court. Because family, once suppose if head of the family got a heart attack, so he is on the bed written. So he might not be in a mental status of mind, even the family also. So you have to give the reason for the delay of filing the complaint by an application for the delay, to condone the delay. That is the delay condonation application. If judges feel good, normally they accept that and they give the notice to the opposite party to file their written version. So normally it is a 2 period from the date of cause of action. That is a short answer.
How much enforceable are consumer forum orders against banks or NBFCs? I mean,
yeah, it is enforceable, but the consumer has to prove that there is a deficiency. See, normally what happens, see, in public, see here the audience are very sophisticated and educated, highly qualified. I am also not aware of the business much. But the consumer has to prove everything. Suppose if consumer files a consumer complaint, to consumer on the first date of hearing, the board hears the consumer whether the board means the bench. Judges just see that whether he is a consumer or not. Number one, whether he has filed the consumer complaint within a limitation or not. Number three, what is the jurisdiction, peculiar jurisdiction. Suppose if it is a amount is a pecuniary jurisdiction, whatever amount involved is 1 crore. And if it goes to the district commission, then now the limit is 50 lakhs. You have to go to the state commission. 2 crores. It is from 50 lakhs plus to 2 crores that is in state commission. About 2 crores is national commission. So that thing they see once, then they see the genuineness of the case. What exactly, whether it fits in the consumer court or not. First thing, if it is scrutinization order is already passed, and if he found any deficiency here, the consumer will not accept that cases. Number one, this scrutinization, that attachment of the property, and second, theft of electricity. Two things they will not accept. Okay. And other thing, if it is fine, so they give the consumer commission, they give the notice to the opposite party, and they give the 30 days of time to file the written version. And after the written version comes, the consumer has to file an evidence. Then opposite party files an evidence, and both parties they file the written version. Then argument takes place. So it takes little bit more time. But I'll tell you my experience when I was in Alibag. So there was a bunch of matters which I was handling, and the notice was served upon the opposite parties to file the written version within 30 days. And that Supreme Court has also given the directions to every consumer court, whatever district, state, or national, within 30 days, the opposite party. Opposite party means here we talk as a bank service providers. They have to file a 30 days and plus 15 days gracing can be taken in. Means within 45 days, that is a maximum period. If he is unable to file, if he is failed to file within written version in 45 days, so his chance is gone. Now you are saying the how much period?
Yeah. How much
Period means, yeah, that's what I am telling you. Once the notice is served upon the opposite parties fail to appear, naturally on the next date that consumer can make an application for the ex party. Ex party is when ex party is there. On the next date, consumer will come with an application. My complaint to be treated as evidence, my complaint is treated to be the written argument, and my complaint itself is to be treated as an oral argument also. So there is no point. It might be closed. So within 60 days or 90 days, the judgment can come. Sometimes it takes 2 years, 3 years, 5 years. Sometimes it takes 15 years also. If both the parties are big shots, say for example, so they are means they are advocates. I'm not telling the advocates are playing some games, but there are some chances. Suppose both cases are going, the consumer and opposite parties, both are doing well. Immediately the opposite party will bring one application, interim application, they will file it. And when application is filed, naturally the bench, the judges has to take the decision. So whatever decision comes, naturally it will come against the opposite party only, service provider. Again, he will go to state commission. There also he failed. Then he goes to the national commission. There also he failed. Then he will go to the Supreme Court. So sometimes it takes 15 years also, sir.
So
So
consumers,
it depends.
yeah, but
It depends.
really tough for a consumer.
No, even suppose the members and president, those who are sitting on the bench. Here, when I was in 2018 to 19, I was in a Parel court, Boivada. There one case has come, so much of big of papers, that is regarding the operation and deficiency in service of a doctor. So in that case, we need to send to the expert in that matter. I am not a doctor. I am not. Three of us, nobody is specialized in the doctor. So we cannot take the decision. In that case, we have to send it to the. Then we send that file to the JJ hospital to decide. So JJ hospital is a government office. How many years it takes, I don't know. But normally, you should get if everything is good. So it should be within 1 year you can do it. You can do it.
Yes, thank you. Thanks. This is a very great insight, I think, for all of us, because when I was preparing for this panel discussion as a moderator, first time I came to know, being a chartered accountant of 26 years, first time I came to know that I can be a consumer. Till date, I was really not aware, because we never come across these kind of things really. And as you said, there are so many compliances. Rather, we are burdened with so much of compliances nowadays as chartered accountants. So the next question, first question for Shambhu sir, and the last question will go to Puneet sir. Last two questions, then we'll open the forum for questions from audience. From lender's perspective, what is more important from lender's perspective, a collateral strength or a cash flow visibility?
Cash flow is there. So anyone will understand, whoever into finance is the cash flow visibility. And one thing I'm saying that is a standard reply, but then here one thing we are discussing all about SME after stress. One part capital structuring is also for expansion of business. That also need to be discussed as a consultant, whoever is involved into. So if company is really doing well, then also there is a chance also. Our role is again adding there, like say whoever is doing good now, how to get into next milestone. Again, capital restructuring will help. So they have to taken out of from this a standard debt sort of thought and then get into equity, quasi-equity, or even capex management. So even for expansion, our role is there. So we should not restrict our discussion only in case of this stress or somehow there is downfall in the business. For expansion also need to be discussed. So certainly cash flow visibility, like so the collateral is just on say deterrent. Okay, so many lenders will get into secondary treatment of collateral. Otherwise, cash flow visibility.
So cash flow visibility stands more importantly over collateral strength. Now with this we go to the two more questions to Puneet sir. Last two questions. One is, what do you think is the most attractive sector right now for PE funding? What is your, because India, we're looking at India as a happening economy. Forget about stock market, what has happened in last 5 days. So if we just ignore it, but because why this question has come in this particular, especially NPA thing, that people are now looking for opportunities also. So what sectors do you think will be happening in coming days, for especially from P perspective or finance perspective?
Sure, good question. So, first thing we should understand that debt investments are typically modeled on the past data. Basically, you drive the car by looking at the rear view mirror because you ultimately model all your projections, all your present DSCR in the corporate segment, FOIR in the retail segment, based on your existing performance, financial performance, and obligations. So that's more of a rearward looking model. Equity is always forward looking. Equity guys always discount the future, basically discounted cash flow bolte hain. So cash flow is very dear to equity guys also. Now coming to India, India houses almost 17%, almost 1/6 of the world, which means probably one of the largest addressable population. The next neighbor is China, almost equal. So 1/3 of the world resides in these two countries. People buy from people, people sell to people, people basically deal with people. So ultimately, where is the consumer? These two countries. So anything which is related to consumption and what people will consume, invariably energy. Consumption में discretionary spends आएंगे, which is your cosmetics. The compulsory spends आएंगे, which is your food and agri. Then there'll be spends on financials. Basically everybody now, even a chai wala, pan wala does a Paytm or a UPI. Healthcare is again another thing because जहाँ पे लोग हैं वहाँ healthcare inevitable है till the civilization is there. So these are the mega trends. Now coming to mega trends. So किस को याद है, एक tagline थी, कर लो दुनिया मुट्ठी में. Who said that and when? Dhirubhai Ambani, correct. So this was basically 25 years back, 26 years back. That's how a visionary thinks. And he thought that everything can be done on this small device, apart from the talks. And he ensured that the voice time is free till date. So that's a vision, right? So these are the mega trends which people watch out when they are, investing equity. So there are various mega trends. If you look at, entire India, possibly on the food and agri side, is a protein deficient country. So a vast majority of Indians are vegetarians. So they are, by nature, they are protein deficient. So if whatever is supplying you protein is basically something to watch for. Whatever brands are feeding you protein are things to watch for. Now there is a artificial meat available for vegetarians, by the way, if they want to have a meat kebab. So these are the products, these are categories which are, अगर आप आज से अगर 15 साल पहले अगर अपन बोलते हैं टेस्ट यू कैन बिलीव और टेस्ट यू कैन ट्रस्ट, सॉरी, टेस्ट यू कैन ट्रस्ट किसकी टैगलाइन है? थायरो केयर की है। हम लोग तो इंडियन से, हम लोग तो गोल्ड भी टेस्ट करके लेते हैं, गोल्ड सुनार पे भी भरोसा नहीं करते। अगर आप अपना ब्लड दें तो बोलेंगे कि यार कोई और तीसरी लैब में जा रहा है, उसकी रिपोर्ट ऑनलाइन आ रही है। आई डोंट थिंक वी विल ट्रस्ट कि ये मेरी रिपोर्ट है। सो दिस वॉज 15 ईयर्स बैक। धीरू भाई सेट दिस 26 ईयर्स बैक रफली, कर लो दुनिया मुट्ठी में। सो दीज आर द मेगा ट्रेंड्स यू हैव टू वॉच फॉर. So, if you actually categorize these megatrends, then possibly 4 or 5 industries. One is anything related to finance, which is basically portable finance or mobile finance. Could be fintech, could be NBFCs, because this is something which is scalable. Quality of management is good. Adjustments possible ज़्यादा नहीं होते इसमें. Everything is tracked. Governance again is good. Roti and basically मेरे बॉस ने सिखाया था मेरे को, return on time invested for an individual, but return on investment or return on capital employed, ROCE हम लोग बोलते हैं. So these are the concepts which people study. So if you see, इन सब में रोटी बहुत अच्छी है और ROE बहुत अच्छा है. So ROE is for the promoter, ROCE is for the investor, and ROTE is for individuals like you and me. तो ये पैरामीटर्स काफ़ी अच्छे हैं. तो हेल्थ केयर इज़ वन थिंग बिकॉज वी आर वन ऑफ द मोस्ट पॉपुलस कंट्री. सेकेंड इज फूड एंड एग्री. फूड सेफ्टी इज द बेसिक रिक्वायरमेंट. Third thing is anything which is related to digital finance or anything related to digital. And fourth thing is energy. Whether we like it or not, we like a particular temperature. So whether we can afford a AC, we can afford a cooler, but energy तो use होगी in some form or shape. So power sector is something to watch for. उसमें भी फिर बहुत सारे segments है. Like say you can look at the EV segment, then you can look at the batteries, you can look at the green power generation and stuff like that. So one with the sun किसकी tagline है? Sorry? Correct. So, this is a company till 2016, I was a lender to them at 18%, 20%. Today, it's a AA rated company. It invests at much higher than that. Just 6 years journey, 7 years journey. So these are the sectors which we should watch for. Basically, first look at the trends, then find out a mega trend in that, and then look at what are the trends touching each and every one, and then decide which company to bet on. The parameters are clear, management, quality, governance, your exit is very important. Ultimately पैसा बनता तब है जब आप exit करते हो. And the first and foremost is scalability. So these are the 4 factors.
So most important thing you said in the last sentence, exit बहुत important है. जिन्होंने 10 दिन पहले exit किया है, one of my friends, that's a classic case study. Somehow I don't know, he got an insight and he sold all his portfolio complete of around 25 lakhs and he invested in debt. आज वो at least 6 to 7 lakhs profit में है, just because he has been saved a loss of 6 to 7 lakhs. He's getting all the shares at 6 to 7 lakh lesser price. So I think exit is very important. The last question is how a consultant can add a value to all these mega deals or all these happening things in India. To you, sir. Yeah.
To me?
To you. To you.
So a consultant's role is basically role of either a pandit or a goldsmith. एक मैं थोड़ा सा क्वेश्चन पूछता हूँ. How many of you guys buy gold or have ever bought gold? Almost everyone has bought at some point. How many of you guys have bought the gold from a goldsmith or a bullionaire? जो bullionaire मतलब जो सोने का जो ईंट बेचते हैं या बिस्किट बेचते हैं. 1 person, maybe 2. And how many of you have bought it from a jeweler? Almost everyone. So consultant is a jeweler, a bank और NBFC is a bullionaire. वो होलसेलर है, वो एक कमोडिटी में डील करता है गोल्ड. बैंक और NBFC डील करते हैं करेंसी में, सो बेसिकली मनी में. मनी इज अ कमोडिटी. सो वुड यू लाइक टू डील विथ द कमोडिटी डायरेक्टली थ्रू अ होलसेलर और a manufacturer or through a jeweler who can actually give it a shape, which is a usable shape? Can you wear a bullion? Can you wear a biscuit? But you can wear a necklace, right? So वो jeweler का काम है to make it nice, to fit it nice. It should be useful for you, and at some point, if you want to exit it, you can exit it. So that's in a word. But then as a transaction advisor, it's our role to finalize the objectives of the client with the client, and at the same time align his expectations and the investors expectation. Investors expect return with some exit timeline के साथ में. Promoters need a objective to be fulfilled. Like Panse sir said, basic fitting is very very important. So fitting can be, as I gave an example of the jewelry wala example. So that's very very important. That's called capital structure in our world. So structuring the capital for making it work the purpose it is borrowed for or invested for is very important. That's the first role. Second role is mapping the customer with a client with a investor or a lender. It is very important to have both the minds meet. It's like running a marriage of two strangers for a finite time with a defined exit and defined returns to both. The borrower or the investee achieves the objectives, the investor or the lender makes a return. So it's like a financial pandit making a financial marriage. So the third thing possibly is due diligence preparation. Because many of our clients may not be knowing what to disclose, when to disclose, how to disclose, and most of the clients definitely say not to disclose. That's the wrong thing. As a financial advisor, transaction advisor, our role is to ensure that the client discloses. At the same time, gives a plan B or highlights the problem that this is an issue. My NOC will come late, charge creation will take time, there is a security perfection time I need, cash flows can have a dip, covenant DSCR पे covenant आप मुझे flexibility दो, or maybe one quarter of a cure period दो. These are the things which a transaction advisor does. Promoters are passionate, that's why they are in that business. They are not in business of financing. They will always say, I will do well. My rating will go from A to AA. He will never say that I can have a bad season or a bad year. My rating can go down to a BBB. So this is what we do. And final job which we do is basically the negotiation and the deal closure. In the deal closure, the transaction advisor, a smart one, will definitely find out and educate both the sides what is the exit. Without an exit, there is no transaction complete. The transaction completes only when there is exit. So transaction advisor, how many of you guys say that ये लोन प्रीपे कब करोगे या इसका equity का return कैसे दोगे? So that's the most important thing which we all sometimes miss, but most of the time remember. But that's the most important thing. Ultimately, the transaction have to be wound down. So that's the role of advisor to me.
Yes, thank you. Before I open it to audience, three important insights. One is from structured finance, intent and business model are the two things which you should really look at. From private equity, scalability, management depth, governance and exit strategy. And from legal point of view, just have a good lawyer friend with you so that whenever you are in trouble, you can actually refer and you can easily just a phone call away. So that with this, I end my discussion, my points, and open this discussion for audience questions. You were to ask something, sir.
Could you guide us? And the bank has given the loan to many persons. Now we are discussing on the NPA. NPA is on larger scale. So what about the individuals who has taken home loans? Then there is a limited amount. The capacity can be seen. The companies can be promoters. You can see and you can do diligence there. But what about the persons? Certain government decisions change the life of a person. So how you tackle that point? The small finance. Now there is one we rise in small cities. You are giving loans to many persons who are in smaller in scale. So how there are such in Ulasnagar I am residing, where persons are coming that Vakil Sahab we does not want to pay the money. So could you guide us? So it is depth because it is a public fund to bank. Bank is giving one hand to other and taking from one hand. So by this process they are earning. Now, it is not ethical to say that I will protect you by some reasons. So, what due diligence you give or you guide the smaller finance person that what steps he should ensure to pay the loan on time?
So I think you described a situation and उसके पहले opening remarks में ना 5 से 7 ने एक बहुत सी situation describe करी थी कि there are 5 crores homes, sorry 3 crores homes which are being built for people who do not have it. By robbing the people, 5 crore people who are paying taxes, right? This is a situation you wanted to put it into context that basically, government policies change, maybe the labor code, right? Many SMEs and many small companies may have to let go of various employees because they cannot be compliant with minimum wage, which has been raised. But this is a reality, right? And we basically, whenever we underwrite a transaction or whenever we borrow, we keep buffers. Any prudent person will keep some buffer. In the corporate world, we call it DSCR, debt service coverage ratio. In the retail world, we call it FOIR, fixed obligation to income ratio. So you have to be prudent in choosing your FOIRs and DSCRs, right? So if you actually stretch it to full, then obviously the elastic will bend or break rather.
I want to extend that question that the finance is already given. So there is a let go withdrawal. The banking term is certain things that we have to maaf kar do. So what is the limit threshold for closing the write off? I think write off is the word terminology used in your finance. So how much amount the bank can write off?
It is at bank's discretion. Write-off can be 100 crores also. In the corporate accounts, we have written off 100 crores also, 500 crores also. It's completely based on the merit and the discussions of the situation. What is right, A, and B, what is practical, and C, what is profitable. All the three have to match. And it is all contextual. Write-off is the last thing which an institution will do. So when no other recourse is available. And that too only after taking into consideration these three factors: what is right, what is practical, and what is profitable. Writing off sometimes also is advised by the CFO friends and the CA friends कि यार ये quarter का profit अच्छा है, थोड़ा write off ले लो, right? So it is contextual.
Yeah. So just to add to, like say your question could be like say how much bank can take write off, how much cut they can take. So it's being quantified at ground while taking decision based on two parameters. One, if business is no longer going to sustain, and then certainly there is a one-time settlement sort of. In that case, this write-off or waiver comes in picture. So one, collateral, and that two, realizable value of collateral. Okay, so if after that also you have to see the net worth of the contractual people like promoter, guarantor, whoever into contract. So net worth being factored nowadays. Earlier, 10 years back, bank were really reluctant to see. Then sometime nowadays, personal guarantee of party to contract is also being factored. If someone have given guarantee and really having net worth and they're having sustainable business now, so bank will not prefer to get into write-off at least. Even sometime they will be resistant to consider waiver of interest recall. So there are three parameters now: collateral value, realizable value of collateral, net worth of our party into contract, and lastly personal guarantee. I'm saying net worth of personal guarantor. So these are the three parameters being utilized, factored while taking decision on write-off and waiver.
Yeah. See, I have a last thing I will add. On my right is the law, right? So after all the context we discussed, the bank and the legal team of the bank definitely figures in the legal time required, expected legal time. There is a time value of money. Ultimately, we are all dealing in a commodity called money. If it is coming on time, doing well, we call it performing credit. Otherwise, we call it non-performing credit or NPA. So you figure out, once we figure out कि ये time value of money पे नहीं बैठेगा, while as Shambhu sir said कि realizable value है, collateral value है, guarantors हैं, net worth है, but still at times the banks take a call कि write off करके आगे बढ़ते हैं, because अगर मैं litigation में गया and let's say litigation में मेरे 5 साल 7 साल 10 साल लग गए, जीत के भी आएंगे तो time value of money का क्या है? Possibly, maybe it will be a right back at that point in time, because by law तो हमें लेना ही पड़ेगा after 90 days, and then provisioning, and then progressive provisioning, it will be written off. So there are strict policies around writing it off.
So I'm saying technically so-called NPV. Bank is factoring NPV. So if realizing money after 3 years how much, and then now, then how much, factoring NPV being taken. So we will write it back.
So before you take question, I'll just add something. Uh, any chartered accountants in practice here, sitting in the forum? So I'm a practicing chartered accountant. Generally, we do this with our fees. If we just calculate the realizable value, if that is the follow up, and typically it is a cost benefit ratio. If the cost is not going to be very high of recovery, then we just simply let it go. So that is something which he really wants to tell, that the ratio will survive throughout. I think it survives the universe also. Universe also works on cost benefit ratio. So that is the ratio, something which should look. Yes, sir. Over to you.
Yes, sir. I wanted to understand. Now we are talking about expertise in finance who are guiding MSMEs or banks. Is there a need to have a expertise of business development and marketing consultants who would help the banks and the MSMEs, because most of them are good in their own domain, but they are not expertise in terms of business development and marketing. So there is a need. Is there a need for a consulting, consultants or consulting bodies like this who will help the businesses to recover and also help the banks to get the NPA companies out of their losses that they are making? So do you feel there is a need for such segment of marketing and business development consultants?
So yeah, I'm having some opinion. So it's to all, but then yeah. Hello. Yeah. So audible. Yeah. So yeah, there is a need. There is a need because see, and everyone can't be expert of every domain, every segment, every activity. Certainly, as a consultant, we should be open. If there is some technical additional required where they can change their business model, and we are not in this position to provide, so we should guide someone who are really in a position to advise them, maybe subsidy or any technical issue, any I'm saying compliance issue, maybe RBI guideline. So yes, there is a need, in my opinion. And even as a consultant, we should also try to upgrade ourselves, update ourselves on any activity or whatever changes or compliance required in a specific activity, at least particularly for those activities which are regularly approaching us, and those activities which are really very sustainable for default or a stage. So we should also upgrade to some extent, but if there is a demand, in my opinion, and certain specific activity which we are not aware, then it should be guided, and there should be some I'm saying a forum where we can guide them, and this is requirement, in my opinion.
Just a few points to add. So as you rightly said, is there a mechanism to help a business recover and survive, sustain? Yes, there are, and there are many. The first level of defense is once the bank or a lender identifies that this borrower has gone delinquent or is going to be delinquent, they do counseling. Then they try to attempt a restructuring, which is more beneficial for the bank also and the customer also. Then the provisions also are benign. वो भी जब फेल होता है then ultimately NPA बनता है. NPA होता है उसके बाद में then it goes to the either a recovery team or a rehabilitation team. Rehabilitation team basically is nothing but sending it to the ARC. The ARC again gives you a borrowed time at a higher rate, effective rate. Maybe 5+3 is the maximum as far as my knowledge is there. 5 years is the first contract, and then extended based on the need for another 3 years. I think that's enough for a borrower to shape up or ship out of business, right?
No, sir. My point is totally different. Banks are not aware of business development or marketing. They are restructuring it from the financial point of view. I'm saying that people, for example, people who are into branding, advertising, marketing, they know how to make a business work, how to make it profitable, which none of the MSMEs would be good in their own domain of manufacturing or whatever. Bankers are good from finance point of view. But the entire gap which I feel which we are missing is how to make the business successful. And that expertise come from people who are into the actual branding, marketing. I'm just saying, just like a CA is a consultant in finance, there is a big demand, I feel, a need for marketing and branding and business development experts who can revive a business because of the experience and expertise of running businesses from the this domain expertise stream.
Yeah. So I agree. So you are asking for expansion in case they want to expand, and then
no, not even expand. Getting even an NPA to get out of that I'm looking at the domain, business development and marketing branding domain expertise.
Hmm.
So this we are missing in the entire NPA link. That's what I feel, because people are good in terms of production and people are good in terms of financing, but the missing link which I feel which needs to be created.
Sir, I think if I'm getting your question right, what he's saying is, or what he's trying to say is, where banks should have some forum, or we should create some forum of marketing or business development, where banks will also play an active part so that the businesses do not go to NPA.
Exactly.
Am I right?
That also is right.
Just 1 minute, I will give a different direction to it. You are talking about marketing part of it.
Right.
Okay, and you feel that there is a gap.
Right.
And that gap is, there is no consultant.
Expertise, huh?
Expert, this thing. Let me make it very simple to you. एक मिनट. Let me ask you one question. Everybody here. Do we take decision? No. Do you take decision? You check in your life. Have you taken the decision by heart or by head? Most of our critical decisions or major decisions we have taken by heart and justified by head.
Right.
So when you talk about marketing, where you have to appeal? You have to appeal to the heart, not to the head.
Right.
So that skill you have to know.
Exactly.
I will give you a simple example. If I have to sell this pen, which may be of 50 rupees, 100 rupees, 200 rupees, it's the same pen. If I say that when Michael Jackson was in India, he has used this pen for signing.
Right.
ये पेन की शायद बोली लगेगी.
That is where the marketing business development expertise comes in.
Because you are appealing to the heart, not to the head. When you talk about the head, then you will talk about the quality of the pen, material of the pen, the technology. But when you appeal to the, so when you make a product as a byproduct, it will become easy to sell.
Exactly. So that's the thing I was saying, which is a missing link, which can obviously solve a lot of issues.
In a short this thing I can tell you, for the marketing purpose, you are talking from that point of view, there are 4 factors on which you can sell anything in the world. The factor 1 is greed. In economics, we have know that these are the fundamental things, that human needs are unlimited and human resources are limited. So whatever resources I have got, I will use those resources for my use, for my needs in such a way that that need gives me maximum satisfaction, that is consumer surplus.
Right.
And the consumer surplus, if you go in more detail, it is a matter of heart and not by the matter of head.
Right.
So you should know how to appeal to the heart for selling a product, selling a deal, or selling a business. Thank you.
Superb insight. Yes. Yes. Any other question? Yes, one more. I think this will be the last question we'll take, and then we will stop. Any question from the? Yes, the last question we are taking from the audience. Yeah.
My question is to Puneet sir. Sir, we discussed about PE investors, how they look at it, the scalability, then the compliance piece and everything. But what about stress asset unit? What should be stress asset unit appeal or do something so that PE investor will come to them, or what PE unit look at stress unit? How do they look at stress unit? What should be the parameters, like you said, scalability and all?
So very, very good question and a relevant one also. So if you actually look at the PE landscape in India, India has a huge market of distressed debt or distress credit. If you look at the AIF world, the AIFs in India, alternate investment funds bolte hain. If you look at the larger ones, each one is more than $10 billion size. Matlab EAAA, which is Edelweiss Alternate Asset Managers, is standing at almost $11 billion. Kotak Alt Asset Advisors, again $9 billion. 360, which was earlier named as IIFL, around 11 or $12 billion. So there's a huge market for distressed debt and distressed credit in India, and each house has a distressed pocket, distressed investing pocket, which is basically opportunistic, and it runs at a high risk, high return, naturally. And it basically looks at what? It looks at the ultimate ultimate value in the business left over after all the distress, and they negotiate everything hard with the promoter, with the lender, with all the contractual, and they look at some sort of controls in terms of the payments. So all the check signing authorities, basically all these funds require ki they will have an oversight, and in some times they will also look at controlling the cash flows and trapping them in a TRA or a escrow account, as we call it. So there is a very, very strong market in India for distress credit. And you look at any financial house, everybody has one, a distress asset fund or a special situations fund or stress credit fund, whatever you call it. Everybody has. And people analyze the businesses every day. And there are turnaround cases also. Like this Wari wala example kisi ne liya tha abhi. Wari was my distressed investing when I was in a banking. I was a banker for 20 years. So I invested in Wari at 18% three times in 3 years basically. At that point in time, it was a distress credit. It was not doing so well. They were not focusing on their original business, which was the instrumentation, and they were venturing into the photovoltaic panel business, basically the solar panel business, and that was not doing well. They were in distress. We supported them as a quasi equity. Basically, it was not debt nor equity. It was a distress credit. So it had elements of credit wherein there was a promised return, which was a minimum IRR which we will make, and it had flexibility of an equity that जब बने तब दे देना, लेकिन इतना तो मैं लूंगा आपसे, इतना रिटर्न तो मैं लूंगा. Otherwise, I'll have a convertibility into equity. कि अगर आप नहीं कर पाए तो फिर मैं equity में convert करूंगा and I will run the company. So there is a very, very strong market in India on that.
Like whatever you said, a specific fund or alternative investment fund, mostly governed by SAB.
Yes.
Yeah. So I'm saying there are some institutions governed by RBI also. They are also NBFC mostly, even Kotak ARD also there. So they are also funding, but again, high risk, high reward proposition is there. They will also negotiate high pricing, and certainly. But then, as a consultant, our role is may arrange for, but it should be for minimal time, so that after certain period, maybe after 6 months or a year, it should be shifted to normal banking. Otherwise, sustainability will be in question. So there are RBI governed institutions also, mostly NBFC. They are also extending fund for a stress asset. Certainly, like Puneet officer said, there are AIF governed by SAB. They are also having fund available for stress asset. Thank you.
Hope it was answered, right?
Yeah, sure. Actually, that's what I wanted to know. I mean, like you said, I mean, it is important that cash flow should be escrowed, and it should be to a back ended so that his returns is ensured. But I mean, there is a scope. Like you said, there is a scope, but a lot of work need to be done into specifically MSME segment because there are very little investment of such AIF and special situation fund in MSME piece because they are majorly they look out for corporate deals.
See, MSME, again coming back to the topic, fundamentally the credit is what? Fundamentally the credit is basically a promise to pay back, which subject to two conditions: one, intention to pay, and second is ability to pay. In a MSME situation, what happens? You ultimately create a credit contract of time value of money lent with a promised return. But how do you model it? Because the MSME scales are so small, they are by definition small. So ultimately, you end up doing a secured contract, which is typically a lap or some sort of a property back. And the sizes of the contracts are very small: 5 crores, 2 crores, 1 crore, 40 lakhs, 10 crores, right? A private credit fund or a special situation fund or a distressed debt fund will look at what? They will look at upwards of 100 crores. Why? Because two reasons. One, the capital which they raise is bulky. It doesn't come from a retail investor or a retail depositor. It comes from wealthy families, family offices, corporate treasuries, global investors are the LPs, limited partners of that. General partners run the fund, right? So the fund team size is very small, maybe starting from 3 or 4 to maximum 7 or 8, maximum to maximum. So when you run a fund, very tight ship of 5 to 7 people, you can't cater to 1,000 SMEs distributing 1,000 loans, but you can do a 200 crore loan multiplied by 5. So you have deployed 1,000 crores, and then you can manage it as a team. So that's why AIF ka investment in direct investment SME is very very small. I agree. Is it picking up again? Yes. There's a company called AUM Om Capital. They have created a MSME focused distress credit fund. They will only do MSME lending or rehabilitation kind of stuff. Having said that, this is a small beginning. But what is the traditional practice, which is very prevalent and successful? Basically, as Shambhu sir said, referring these cases to ARDs. Every bank has a ARD. Kotak has a beautiful ARD, Asset Reconstruction Department. And then ARCs. There are a lot of ARCs and NBFCs which do this business. So that is how it is done. Very.
I was to add this only. ARCs and ARDs are doing good job. There's one more thing which is available is HNIs, high net worth individuals who are actually available as investors. So you need to find out right forum, need to find out right connects, and go to approach these people. They are ready with investment. If they find your model good, they're ready to invest, because the requirement is also 1 crore, 2 crore, 5 crores, where HNIs are comfortable. So this gap can be bridged accordingly. So with this, I like to thank all the three panelists, Advocate Ramesh Babu sir, Puneet Chaudhary sir, and Shambhu Singh sir, for this wonderful discussion and a great insight, especially for me as a chartered accountant. So it was a great enriching experience for me. And over to our. So there are lots of MSME CAs who write off the fees.
And once again, we extend our gratitude to our panelists, and I request Mrs. Kamini Kanekar to felicitate our moderator for panel discussion, CA Tejas Padye. Also, I request Mrs. Kanekar to welcome Mr. Yuvraj Mohite, Managing Partner, Tara Landquist, Solution LLP, ex-associate VP, Kotak Mahindra Bank. Also, I request our panelists to come ahead for a photo opportunity.
On behalf of NPA Consultant Private Limited, it is my privilege to extend a heartfelt vote of thanks to all of those who have contributed to making today's conclave meaningful and successful. First and foremost, I would like to express our sincere gratitude to Chief Guest CA Abhay Manudhane sir for gracing this occasion and sharing his valuable insight with us. I would also like to extend our deep appreciation to our guest of honor, Mr. Ashok Katra, whose presence and guidance are greatly valued. A special note of gratitude to Dr. Vishwas Panse, whose vision and leadership continue to inspire the work we do at a NPA consultant. I would also like to sincerely thank all our distinguished partner, panel discussion moderator Mr. Tejas Padhesar, and panelist participant namely Mr. Ramesh Babu, Mr. Puneet Chaudhary, and Mr. Sambhu Singh for sharing their knowledge, experience, and perspectives. My thanks also goes to the organizing team who worked tirelessly behind the scenes to bring the event together. Your dedication and effort have ensured that everything runs smoothly. Finally, I would like to thank all our esteemed guests and participants for taking your time to join us in this conclave. We hope today's conversation will lead to stronger collaboration and new opportunities in the future. With that, I would now request all our guests to kindly proceed for the high tea, where we look forward to continue this discussion in a normal, informal setting. Thank you once again for being a part of us. We wish you great and pleasant evening ahead.